Hi everyone. Okay, well welcome to the last week of class. I'm sure that you guys are ecstatic that this class will soon be ending. I totally understand that. I know it's a tough course and a tough 7 weeks. So let's this week I'm going to have a couple of videos because I want to keep each one a little bit shorter than they've been in the past. So for this video, I'm just going to cover the first problem, and that's P11-26. Requirement 1, 2, and 3. I'll create another video for the remaining problems, but this one is probably the most involved of the problems, and so I just wanted to create dedicate one video to P11-26. And in this problem, first of all, there's 3 requirements that you're going to have to do. I'm sorry, 4 requirements. So it's requirement 1 through 4. So in this requirement, what we have is we have to compute and journalize payroll amounts. So the best thing to do, if you want to refer to the text, I'm going to be giving you some pages that you can refer back to. But we're given some information that during 2016, Stony Brook Salons, an employee by the name of Werner worked for the company all year at a $14,000 monthly salary. So again, we got to keep track of what we're looking at. We're looking at monthly salary. We're looking at the full year at the end. So we just got to keep track of what it is that we're actually calculating. He also earned a year-end bonus equal to 15% of his annual salary. So this employee, Werner, earns $14,000 a month, and at the end of a year, he earns 15% of his annual salary for his year-end bonus. Now, the taxes that are withheld during 2016 are given to you. You don't have to calculate them, per se. They tell you that it's for federal income tax is $980 per month, plus $1,700 on his bonus check. Now, that $1,700 is not per month. It is just a one-time tax. The state income tax withheld is $60 per month, plus $40 on the bonus. And again, that bonus is just a one-time thing, so it's not per month. It's just a $40 one-time tax. Then FICA taxes are withheld, and in addition, Warner authorized some other payroll deductions, which are a charity fund that would be 2% of the total earnings, and then life insurance of $35 per month. So the first thing that we're asked to do in the requirement 1 is to compute Werner's gross pay, payroll deductions, and net pay for the full year 2016. So in this first requirement, what I want you to do is, first of all, this is for payroll for the year ended December 31st, 2016. So this is calculating his payroll, Lee Werner's payroll for the entire year. And in here, you'll see this calculation. I want you to put down what you're calculating. The reason I want you to do that is because if you just put the amount there and it's wrong, I can't give you partial credit. But if you tell me how you calculate it, and I see that you made just a minor error, then I can give you partial credit. So in this column, you're going to put your calculation, how you came up with the amount that you're going to be putting in this annual amount. So this is where your amount goes in this column, and then this is your calculation in this column. Now this first line, gross pay, nothing goes in there, okay? That's just a heading. So for the gross pay, you're going to be taking your salary and your bonus, do your calculations, put those amounts here, and then in this line, put the total gross pay, which is the combination of your salary plus your bonus. Then in these columns, you're going to be doing your deductions. You're going to have your federal income tax, your state income tax, your FICA, your OASDI, then your FICA Medicare, then the charity fund contribution, and the life insurance. And all those, again, you're going to put your calculations in this column and your amounts that you came up with in this column. Then you're going to have your total deductions. Your net pay is going to be your total gross pay minus your total deductions. So think of it, just think of your paycheck. When you look at your paycheck, you'll see your gross pay, but then they take out all those fun things that we like to see taken out, and at the end, you have your net pay. That's what you actually take home in cash. Okay? So some things to keep in mind when you're looking at these different calculations here for the deductions. The federal income tax, first of all, they give it to you. They give you what the monthly amount is for the federal income tax. So you want to do an annual rate here. You want to do your calculation for the yearly rate, and then that one-time bonus tax, same thing for the state income tax. Your FICA OASDI is 6.2%, and that's capped at $117,000. In other words, if the person makes over $117,000, the 6.2% deduction is only taken on the first $117,000. So keep that in mind, 6.2% on the first, $117,000. Your FICA Medicare is 1.45% on the full amount, on the gross salary. So there is no cap on that. Your charity fund is given to you. They tell you that it's 2% of the total gross pay, and then the life insurance is $35 per month. So you add up all those, you come up with your total deductions, and again you subtract that from your gross pay, and you'll get your net pay, which is the amount of cash that the employee, Lee Warner, takes home. Now in requirement 2, what we need to do is we remember that the employer also has to match taxes. So it's not just what the employee pays into taxes, but the employer also needs to pay into the taxes for that employee. So many of us aren't aware of that besides the taxes that come out of our own paycheck, the employer is also responsible for matching that amount. So we want to put again the gross pay that Lee Warner made for the year, and then the employer portion for FICA is going to be again 6.2% on first $117,000. Then FICA Medicare will be 1.45% on the full amount, the gross pay. And then you have the federal unemployment tax and the state unemployment tax. Now with the federal unemployment tax and the state unemployment tax, the amount that's calculated is only up to $7,000. So after $7,000, there is no more unemployment insurance on a federal or state level that's taken out of the that the employer has to pay into. They only have to pay on the first $7,000, and those rates are for federal is 0.6%. So be careful, it's 0.6%, and then for state it's 5.4%. So you can see there's more given into the state unemployment fund than the federal unemployment. So really the state pays a bigger portion of unemployment when an individual goes on unemployment. The employer has contributed more to the state bank, so to speak, than the federal bank. Okay, so then you're going to come up with your total employer payroll tax. Now requirement 3 is going to be the journal entry, and by the way, for requirement 1, you can go to page 584, will be an example of the textbook. For the requirement 2, you can go to page 589 to view an example. Now, the third requirement is going to be simply journalizing, doing a journal entry for the employee payroll. So you're just going to do a journal entry, and it's going to be based upon the numbers that you calculated in requirement 1. So in requirement 3, you're simply going to be journalizing all of these different deductions and the gross pay. So again, for an example of that, you want to go to page 589. We'll give you an example of how to journalize that. And then requirement 4 is going to be a journal entry to record the employer portion of taxes, those amounts that were calculated in requirement 2. And you can see an example of that on page 591. Okay, so those are the 4 requirements for the first problem. You're going to be calculating the employee payroll, that the amount that they earn, the gross pay less the deductions. And you can see an example starting on page 584. Just read from it's not just on that page, that's where it starts. For requirement 2, page 589 is where to learn about how to do the employer payroll expense. And then requirement 3 and 4 are the journal entries, page 589 for requirement 3, and page 591 for requirement 4. Okay, I hope that makes sense. If you have any questions, again, always feel free to contact me at 602-639-7378. Thanks so much.